price is right now working lower in this downtrend, but at the same time, price just broke the lower trend line of this overall pattern working higher, and bigger pattern always takes precedence over the smaller ones. And as the price is breaking this channel, according to price action, we expect for traders to attempt to create new extreme. That's according to trendline rules. Okay, so as the price keeps pushing lower, we have two conflicting beliefs now. We have this bearish downtrend working lower, and we have this bigger bullish uptrend working higher. We're expecting a new high, but we are way below EMA, and we need to respect this downtrend. So as the traders, we are sitting on our hands and we are not doing anything. We're way below EMA to sell, but we're also not really looking to buy because this downtrend is still in play. And look what you have. You have a break of this downtrend. So we're expecting the same thing. As we're expecting new high, we're expecting after break of this downtrend for price to create new extreme, and price created new extreme. Perfect price action. So when we're looking at the chart like this, we know that the downtrend played out. Okay, that doesn't mean that we were just going to start buying. We're just going to be sitting on our hands. We are not at the key entry point or anything. This is still unclear. We can resume working lower. Anything can happen, but price keeps indicating by big bullish bars, strong bullish momentum. We actually pushed above the EMA, and this is good indication that the trend is changing. Strong bullish momentum. You guys can see I have the short-term trend line working higher. You always have to draw the short-term trend lines. They will keep you on the right side of the market, because after break there will be most likely new extreme. So as I see price working higher like this, all I'm expecting is a pullback, and I'm expecting reversal pattern. I'm expecting for price to give me two failed attempts in the previous trend's direction. Previous trend direction was bearish, so reversal pattern would look like two failed attempts, meaning failed second entry short. There will be first entry short that would fail, and a second entry short that will fail. But look what is happening here. We already moved too far high up. We're too far away from EMA, and this is not a safe reversal pattern. We need to now just be patient, because for safe reversal pattern, we really want to be touching the EMA, and we really want to be not that big a move. You don't want to be going long after all that move happened. Okay, so we're just sitting patiently on our hands and take a look. Just a first entry short, first break of this short-term uptrend. So we're most likely expecting a new high, and look what we get. Attempt to create a new extreme, and price is working higher. Another attempt to create a new extreme, but we're not buying this market. Even though we're expecting new high, you're far away from this EMA. You're far away from key entry point. You don't want to go long yet. And what is happening? And price is actually reversing. Okay, so we need to switch the gears now, because right now we have a double top right here, and a lot of times close is close enough in price action, and we don't have a new high specifically, but we have attempt to create new high and a double top, and that is close enough. And price is suddenly pushing lower and below EMA. So from this point on, this is looking like a trading range, because we are swinging up, down, up, down. We are swinging up and through the EMA, and this is really starting to get confusing, because there's really no high probability setup yet. This is the double top, which resets the count, so you push strongly below EMA, once again indicating strong bearish momentum. So you're expecting the same thing like you were expecting reversal pattern. We are expecting now a reversal pattern to the downside, because we pushed below EMA and the uptrend played out with the break and a new high. So it is safe for us to be looking for reversal pattern. So you get a first entry long pullback, and you get a second entry long failure, but we're not touching the EMA, and we didn't even get trigger below this bar. But from this point on, this is a clear trading range. There is a slight upward bias, but we are expecting for price to go all the way down to here, and it is not happening. We keep pushing above the EMA, and this is what it's called a bullish imbalance, because the sellers are extremely weak. We cannot even make it to the bottom of the trading range. And as you guys can see, as we keep pushing higher, there's more bulls than the bears in the market, which means there's some sort of a bigger pattern, because this trading range is just not holding the price nicely. And as you guys can see, if you just draw the trend line from these lows, you guys can see that there is an upward bias in the market right now. Okay, so as we are pushing higher, we're confirming the bullish bias. And take a look, there's still no high probability setup yet. That comes with the territory of being a trader. You have to sit on your hand patiently. So as I'm watching this, I'm also starting to get a little bit confused. I'm getting closer to this resistance, and we're starting to wedge a little bit. But there is a higher likelihood that the price is going to go higher, because we pushed above the EMA and we have this nice trend line working higher. Look what you have. You have a new extreme, You have a first attempt by the bulls to go higher, it failed, and you have a second attempt by the bulls to go higher. But I didn't really like this trade at the real time yet because it was such a big bearish bar. You pushed below EMA and then you have this upside reversal bar. I still thought it is better to be a little bit patient, to maybe wait for price to get to this key entry point, and you have a new high, first entry long, pullback, second entry long, failure. Okay, but we don't want to go short yet because there's a bullish imbalance and there's this uptrend working higher and there's an overall bullish bias. So as the price triggered every seller in to their orders, to their trade, and instantly reversed higher, this is now a double trap because initially it looked like we're gonna have a first entry long, pullback, second entry long, it's gonna fail. That's what it looked like. And the sellers thought they're gonna push the market lower, but instead they trapped all the sellers and instantly reversed it. This was my first trade for today. There's a higher likelihood that the market is going to push higher and we're going to make the new extreme of this overall bigger pattern still. Then we're gonna push lower. Market barely worked for a scalp with the limit order. And then price is right now just consolidating. Take a look how EMA is flat. It's in the middle of bars. There's a lot of bars going sideways. You have a bearish move lower and you have a big bullish bar. Now this entry would be a little bit more aggressive because right now you're inside of this congestion. EMA is completely flat. But once again, take a look what is happening. Bullish imbalance. You cannot push it lower. There are higher highs. Lows are stagnant, but you're making higher lows. Highs are stagnant. You're making higher lows. So this is a big bullish bar. You closed above the EMA. This was a very tempting trade to take, but I was sitting on my hands because of the congestion. It's the smart way to play. Now when you see a congestion like this, the best way to trade the congestion, you want to fade the breakout, but we are not fading this breakout. Why? Because overall bias is up. Think about the bullish imbalance and think about this trend line. We don't want to fade the breakout against the trend. Okay, if we broke to the downside, it would be perfect. We would fade this breakout back to the upside. Okay, and the market keeps pushing higher, and you're starting to break this resistance, and you finally have a new extreme. You finally have a new extreme for this initial pattern that you found in the morning. And look what you have. You have a tiny, you have a tiny bearish bar. You're far away from EMA, and most breakouts from trading ranges fail. Even though there's a bullish bias in this market, this is still looking like a little bit of a trading range. This is by no means a strong trend. And when you see breakout above the key level, you never want to be buying the market in its breakout phase. You want to wait for price to pull back, and then if it gives you a breakout pullback pattern, retest the breakout area, then you want to keep buying. So as we all know, the most breakouts of trading ranges will fail. You're far away from EMA here. This is a tiny little bar. This would be normally, under normal circumstances, a great failed breakout. However, market created all-time highs, and you never want to be shorting all-time highs. So that's why we didn't take this trade at all, and it was good because you never know during the all-time highs when you're going to make a few more pushes higher. But failed breakout above this resistance, most breakouts of trading ranges will fail. The market just kept pushing lower and kept pushing lower, and coming off this failed breakout, and failed breakout will generate a lot of times a strong momentum. Remember that. So I'm just going to delete this trend line just to make it a little bit less cluttered. But as you guys can see, price eventually created the new extreme. Okay, and as the price is pushing lower, we are right now bouncing off this trend line. And this was a pretty decent entry to take at the time. I put my limit order in, but I didn't get filled, and it barely worked for a scalp with the limit order, I think. But looking back, we're coming off from the failed breakout, which a lot of times generates strong momentum. We're inside of this downtrend, and just as you guys can see, after break there'll be a new low, after break there'll be a new low, after break there's attempt to make a new low. This is just a first break and we don't have a new low. So taking this long right here is a little bit premature, because we still have this downtrend working lower and we're coming from the failed breakout. Okay, and market just keeps pushing lower. So our natural first target is get to all the way down to these lows. The market keeps pushing lower, and there's a new low. There's a first entry short, and there is a second entry short. But we don't want to take the second entry short. Why? Because downtrend played out with the break and a new extreme. And look what happened here. Market pushed higher, and here you're going to witness my mental error for today, because as price created this big bearish bar, and I saw this big bullish momentum, I put my limit order in hoping for a failed second entry short. Because as I'm looking at this, I see that the market played out with the break and a new low, and I'm expecting for price to push above the EMA. But take a look what happened. You have a new low, first entry short, pull back, second entry short, but we are below EMA. And a trader even asked me, is this a legit failed second entry short? And I told him, no, we're below EMA. So already I knew I shouldn't take this failed second entry short. I took this all the way up to here, which means my stop loss has to go below this swing right here. So I'm risking, you never cannot enter after 2 bars. And this is the first bar and this is the second bar. You cannot enter right here and put your stop loss all the way down to here. If you're going to enter this trade, you have to put the limit order here, so you have only a 1 bar entry. I broke my rule today. I was a little bit too anxious to get into this trade. I knew it wasn't a good failed second entry short because it's below EMA. You barely pushed above the EMA, and you guys can see I got completely smoked on this one, and they got me good. This is how you know this is a good trap, because look how steep this move was. As the market is right now indicating strong bearish momentum, this is changing everything, because right now we have a break new low, we keep making new lows, and price keeps pushing lower and keeps pushing lower. So this is no longer just a trading range structure. We keep making new lows, we keep pushing lower, and as you guys can see or know, when you keep making new lows and new lows, or new highs, there's almost always a bigger pattern in play. So you have to try to look for your trend lines, because once you see price making new lows, new lows, new lows, there's most likely almost always a bigger pattern. And take a look how EMA is pointing lower. So this is a clearly strong bearish downtrend right now. So what does this mean? We're looking for second entry shorts, or we're looking for failed second entry longs. There's a new high, there's a first entry long, pullback, second entry long, failure, but the bar is not too good. This is too big of a bearish bar. You're far away from EMA. It is better to wait, and price keeps confirming the lower downtrend. Look what you have here. You have a new low, so you're counting from this point on. Okay, take a look how the structure has changed. Earlier it was uptrend, and now it's giving you clear information that it is downtrend. You have to adapt and switch the gears. This is the new low, and price broke lower, so it's a first entry short. We're pushing hard, pushing hard. There is no break below none of these bars lows, as just here. Below this bar low, there is a first entry short. It failed, and there is a second entry short, big bearish bar. And take a look. Remember the trend line rules on all of these short-term uptrends and downtrends. This is the short-term uptrend. You have a clear break, you have a clear new high. This is first leg pullback, second leg. So this is a 2-legged pullback to where? Back to key entry point, and is a second entry at the key entry point with the direction of a trend. This is a high probability setup. This was the second trade this was the third trade that I took, and market just keeps pushing lower. This was a gorgeous trade. So I was 2-1 at this point on, and market just keeps pushing lower, keeps pushing lower. We are overshooting the trend line a little bit, but we can have it drawn a little bit differently. But when you're coming from the one side of the trend line, you're most likely expecting it to get to the other side. Okay, so as we are watching price right now, we're still counting from the lows. You have a new low, first entry short, second entry short. So once again, you get a second entry short with the direction of a trend. But at this point on, do you see the difference between this and this? You're touching the key entry point. This is why this is a high probability setup. You're not touching the key entry point. This is why this is a not high probability setup. It worked in this time, but next time it will not work. And take a look how it quickly is bouncing. So always wait for price to get to the key entry point, so you're on the right side of the market. Okay, and when we're coming from the one side of this trend line, we're most likely expecting for price to go all the way up to here. The market just keeps pushing higher. You don't want to keep buying because there's a strong uptrend. Wait for confirmation. Once we are in the strong downtrend, excuse me, I said probably uptrend. Once we are in the strong downtrend, the downtrend will play out after break and new extreme. Okay, so price keeps pushing higher, price keeps pushing higher, and you have, I actually have the trend line a little bit like this. You have a short-term uptrend working higher, and you have a first entry short, a second entry short, and you can actually draw it a little bit that you're coming off the trend line. Hold on, let me actually draw it like this. And this was pretty tricky, a little bit tricky trade. You can actually draw it something like this. As you guys can see, you have a second entry short, very close to coming off trend line. This is a tiny little signal bar, so this entry was definitely worth risk because this is a strong downtrend. You're coming off the trend line. This uptrend, however, is in play, and notice how every single time when the trend hasn't played out, you're taking a risk. You always want to wait for price to create a break and a new extreme. And as you guys can see, you have a tiny little micro break. Price pushed to the downside, broke this micro channel and reversed, and you have a break, new extreme, and this is now confirming the bearish downtrend, and price push to the downside and make a quick easy scalp. I'm actually going to mark this because this is a very calculated risk, and there is a higher likelihood that price is going to push to the downside rather than go up. You never know when you're going to make a few more pushes higher. This is such a tiny signal bar. You're sneaking with the limit order. You're betting on this trend line to work, and a lot of times it will work. So you have to follow the rules and you have to take a chance here. And look what is happening. Market is keep pushing higher. So once the market keeps pushing higher, what we are expecting for price to create new low. So we're not buying. We're not picking top yet because we want to see a bearish confirmation. We want to see for price to push below EMA and give us a reversal pattern. So it looks like we may have here. Come on, let's push below EMA. Strong bullish momentum. Okay. So we're still not buying yet, but we already know there's something tricky a little bit. And we're okay. Now we're going to push below EMA. Now it looks like the downtrend may resume, and we're going to get below EMA, and we're going to wait finally for the new extreme according to price action, and market just keeps pushing higher. Take a look what happened. By this time, by this bar formed, you have to switch the gears. You guys can see there's this nice tight uptrend working higher, and you ticked one tick lower and instantly reversed up on this big bullish bar. This is a slightly aggressive entry. I wouldn't take this probably on first entry, but the way you ticked lower trapped everybody in and still reversed, because now you have enough confirmation of this trend line. This little bar gave you confirmation of this trend line, so you get a third swing here. You're getting information that you're not pushing below EMA. This is why you don't want to be selling top here, because you really want to wait for price to push below EMA, give you confirmation of bearish momentum that we are truly going to make a new low. It's not happening. We keep pushing higher, and this is why you can see nothing is 100%. 90% of the time you will get a break and a new extreme, but if the price action for whatever reason will not give you a new extreme, you have to adapt and you have to switch the market. You cannot pick a top just hoping you're going to get a new extreme. You always want to follow the price action. We cannot move the price. We're not institutions. We're retail traders. And price keeps working higher, keeps working higher. So right now, when this uptrend, we're looking for second entry longs or failed second entry shorts. We have a little bit of overshoot, and overshoot a lot of times generates strong momentum to either break the trend line or either straight up reverse it. So take a look what is happening. You have a new high, you have first entry long, pull back, you have a second entry long, but this is a horrible doji bar. You close below EMA, so you cannot take the second entry long. Not only that, because of this overshoot, you're expecting for price to get to the other side and possibly break it. And look what you have. You have a third entry long, and you're confirming this key entry point. So you may be thinking, okay, now it's time to buy this market, but not really yet, because you have this overshoot. You want to be a little bit careful. Market pushes higher, and look what is happening. You get a nice confirmation, high-low setup. EMA is holding price, and the trend line is holding price. So now you have two key entry points holding price, and now it's safe for you. The bulls gave you confirmation there in the market to go long, and this is now a high-low setup, nice bullish bar. Quick, easy scalp. Our stop loss goes one tick below this signal bar, and this is the new low. And like I said, we're looking for second entry longs or failed second entry short, because a lot of people are going to pick tops in uptrend, and you have a new low, you have a first entry short, pull back higher, second entry short, and once again, look at this nice bullish reversal bar. Personally, I tried to sneak in here. I got left behind on a limit order, and I wasn't quite feeling this trade, so I ended up with 2-1 for the day. And this was a great trade in hindsight, because once again, two key entry points are holding, and market just pushed higher. Okay, so look what happened next. Oh, you have a break of this uptrend, and take a look. You have a overshoot right here. A lot of times due to the breakout right here, and this can either potentially be because now you're, as you guys can see, now you have a big bullish bar. You have a first entry long, second entry long. You have a double bottom right here. And you have a first break of this uptrend. So once again, you're expecting for price to create new extreme. But I don't think this is a safe entry yet. You're below EMA, so you don't want to take a chance here. And as the price keeps pushing higher, this can actually end up being a two-tier channel like this. It's looking very nice. and we're expecting for price to create new high. So you have a new low, you have first entry short, pullback, second entry short, but by this time you're very close to this resistance. You have 1, 2, 3, 4, 5, 6 bars just going sideways. I don't think this is really high probability to go long here. We are waiting for a new high, so the idea here is great, and market just rallied up higher. I think the next time you're going to take this trade, it may reverse on you, so I think it's really better to be patient here. But it is a failed second entry short, but I really don't like the resistance here, and I don't like the 6 bars really going sideways, because we didn't even move nowhere. We really just stacked up, really just up, down, up, down, up, down, up, down. And this is really quite confusing, but look what's happened. Market finally created new extreme. So after this new extreme, we expect for the uptrend to play out, to either have straight up reversal or possibly correction. So we have this downtrend working lower. Whoops, hold on. So you have a new high, you have a first entry long, pullback, and a second no, we actually didn't trigger higher, so there is no second entry long failure. Price just pushed lower, and there is a second entry long failure, but right now you're not touching the EMA like you were right here, so you don't really want to take this setup, and market just is bouncing higher. So what you're gonna do, you're gonna extend this trend line a little bit. You have a first break of this downtrend. Price attempted to create new extreme. We have a double bottom, and it keeps, oh, we actually have, excuse me, a big bearish bar, but I don't think you want to sell this, because this is a gigantic bar and you're selling directly. You almost, by the time you're selling, you almost have just by one tick a new low. So I don't think you want to go short here yet. And price finally created new low, so the downtrend played out with the break and a new low. So we're expecting for this downtrend to play out, and you have a first entry short. Market is pushing higher. This downtrend played out, uptrend is resuming, and you're expecting a failed second entry short, but once again, market didn't give it to us. Sometimes market can be a little bit spooky around all-time highs, because people are a little bit hesitant to buy at the very top, and they're a little bit hesitant to also sell. As you guys can see, this was a sell-off, but it instantly was bought, and we instantly rallied up higher. And you know, I took a losing trade right here. There's nothing to think about. That's part of business, and you have to accept it. Losing trades are part of every single strategy. And if you keep your composure, you will easily make it up throughout the day. So I'm going to wish you a great weekend. Take care, buddy.